Indonesia has agreed to lift its restrictions on the entry of its workers into Malaysia effective August 1st. Human Resources Minister Datuk Sri M. Sarawanan said the two countries agreed to integrate existing systems and create a single channel for the recruitment and entry of Indonesian domestic workers, as agreed upon in the previous Memorandum of Understanding. Sarawanan was in Jakarta in conjunction with a meeting of the Malaysia-Indonesia Joint Working Group. He said the system will be operational in 3 more weeks, after which a pilot project will be implemented for 3 months to ensure a smooth execution. Sarawanan believes this development will pave the way for the entry of more foreign workers into other sectors, and reminded employers whose foreign worker quotas had been approved by his ministry to immediately make levy payments with the Immigration Department. 2 weeks ago, Indonesia said it would temporarily stop sending workers over after Malaysian authorities continued to utilise the existing Made Online system, which has been linked to allegations of trafficking and forced labour. Bursa Malaysia reported a 33.2% fall in second quarter FY22 earnings as domestic and global developments, including global inflationary pressures, weighed on its top line. Net profit came in at 59.47 million ringgit, while revenue shrank 22.6% year-on-year to 151.89 million ringgit. For the first half, the stock exchange operator's net profit fell 39.4% to 127.44 million ringgit, amid lower operating revenue as income from securities trading shrank. Top line tumbled 26% year-on-year to 317.19 million ringgit. It declared an interim dividend of 15 cents per share. This represents a payout ratio of 95.3%, higher than the payout ratio for the first half of FY21, which was at 92.3%. In a statement, Bursa CEO Datuk Muhammad Umar Swift said he expects the number of new listings on the Bourse to remain strong in the second half of FY22, driven by higher domestic economic growth of 5.5% as forecast by the World Bank and higher consumption demand. He said the Bourse operator will continue to enhance the attractiveness of existing listed issuers through its public listed companies transformation program and generate more trading activity by continuing to actively engage with existing and potential market participants. At the close, Bursa settled 0.47% higher at 6 ringgit 43, giving it a market capitalisation of 5.2 billion ringgit. Nestle Malaysia saw its second quarter FY22 net profit rise 26.1% to 169.65 million ringgit on the back of higher sales. Quarterly revenue was up 18.8% to 1.64 billion ringgit. The food and beverage manufacturer's CEO, Wan Aranos, said consumption continued to accelerate in line with the removal of travel restrictions, that's supported by its demand generation activities and excellence in operational execution. It declared an interim dividend of 70 cents per share. First half FY22 earnings rose 21% to 374.83 million ringgit, and revenue saw a jump of 17.8% to 3.33 billion ringgit. Going forward, Nestle expects headwinds in the second half of the year to increase in view of the ongoing disruptions in the global supply chains, sharp increases in prices of most globally traded commodities, rising inflation, prolonged Russia-Ukraine war, and unfavorable exchange rates. It said it remains focused on driving sustainable growth in the remainder of the year and will continue to cushion the impact through prudent cost optimization and tight management of internal efficiencies. Shares in Nestle were up 0.22% at 134 ringgit and 80 cents, giving the group a market capitalisation of 31.61 billion ringgit. Unisom Malaysia says its second quarter FY22 net profit surged 276.7% on the back of higher average selling prices coupled with the appreciation of US dollar ringgit exchange rates. Quarterly earnings jumped to 205.86 million ringgit, while revenue rose 15.4% year-on-year to 464.06 million ringgit. It declared an interim dividend of 2 cents per share. As for its first half FY22, Unisam's net profit jumped 156.4% to 256.55 million ringgit, on the back of a 14.5% year-on-year increase in revenue to 888.51 million ringgit. On its prospects, Unisom said, despite the economic and geopolitical uncertainties, interest rate concerns and global supply chain disruption, its outlook remains positive. It expects to book a satisfactory performance come the third quarter of FY22. At the close, Unisom rose 9.09% to RM2.76 a piece for a market capitalisation of 4.45 billion ringgit. Lotte Chemical Titan Holding LCT swung to a loss in the second quarter of FY22 due to margin squeeze resulting from an increase in feedstock cost and a decline in results of associated company Lotte Chemical USA Corp. The company suffered a net loss of 145.92 million ringgit against a net profit of 382.29 million ringgit a year earlier. Revenue rose 10.8% year-on-year to 2.82 billion ringgit, largely due to a 16% jump in average product selling price. No dividends were declared in the current quarter. For the first half, LCT booked a net loss of 41.93 million ringgit against a net profit of 822.3 million ringgit last year. Revenue rose 13.6% to 5.58 billion ringgit. LCT President and CEO Park Kyun-chol acknowledged the challenging business landscape and current uncertainties have hurt the group's financial performance. He said the company rigorously executes the operational and business optimization aligned to customers' demands, resulting in a lower overall plant utilization rate of 81%. Its operations are swiftly adaptable to the market movements, he added, to ensure the group stays on course to become the top-tier petrochemical company in Southeast Asia. LCT shares finished 1% higher at RM2.01 a piece, giving it a market capitalization of 4.65 billion ringgit.